Hi, welcome to your Ponte Vedra Beach March real estate update. I am Gwinn Volen with Keller Williams located in Ponte Vedra Beach. So one of the questions that I'm getting a lot lately is the Ponte Vedra Beach real estate market slowing as you're seeing nationally in some areas? There's something really important happening here. I guess I want to say the market is gaining in inventory, so I guess you can say it's slowing, but I do not at all see it shifting into any kind of buyer's market. As you can see on the screen here, prices are up. In parallel, some inventory is rising, but I equate that to spring inventory finally hitting the market. Buyers are being selective, but there is not a major shift. By the way, I guess as we're getting started, I just wanted to let you know that I help people like you every day who are looking to move or sell their property in the area. And I'm happy to sit down and talk to you about pricing and what I think might help you get your home market ready. The best way to reach out is to call or text my cell, 904-822-9255. All right, so let's start with the numbers. If I can get my screen to change, there we go. All right, so the median home price hit 1.25 million this year for the month of March. Homes are selling in about 29 days. That's the average time that it's marked as being under contract in the MLS. So there's still time to closing. It isn't closing within 29 days. There are about, I think, 156 listings out there and about 4.3 months of inventory. Those numbers alone aren't really telling you any kind of a story. So if we look at the next slide, which I'm going to get to now, here, look at prices. Prices are up 10.5% month over month and 26.3% year over year. That's a big deal. It tells us that Ponte Vedra Beach is definitely operating as a high-end luxury market where demand remains strong, even if the environment is shifting, aka there is some inventory finally coming on the market. So next slide. So let's talk about speed of the market and how fast things are selling. So days on the market dropped to 21 days, which is down 30% from last month. But here's the nuance. We're actually 38% slower than this time last year. So things have improved in the short term, but the bigger trend is slightly a little slower and more deliberate. I'm not reading much into that, frankly, but that is what the numbers are saying here. So if we look at this, let's look at inventory and competition. This is where people are going to say the market has shifted because inventory has gone up 29% month over month. We saw 71 new listings hit the market. That's up quite a bit. That is a big influx of supply, but again, I think we were needing that supply. So I'm not, as an agent working this market, feeling uncomfortable by additional supply. I think buyers are happy to see it, and if the inventory sits, then buyers will definitely gain leverage. But right now, I think this is spring inventory coming on the scene. So, sorry, I'm having a hard time getting these slides to move. Okay, so let's look at demand. So inventory is coming on, and data is showing maybe there's a little bit of a pullback in demand. Pending sales are down 21% from last month and 43% year over year. I think we take this at a month-by-month thing to see if this is really a significant shift. I don't know that I'm going to jump out and say it's a major shift, but numbers are indicating a little bit of a slowdown overall. So, sellers, when there's more inventory, sellers are going to lose a little bit of leverage. Homes are selling at about 96% of list price. That's super typical. That's kind of what we see every year. So nothing, frightening me about that. I think, when I see that number at 86%, I'm going to say, yes, sellers have really, really lost their leverage. But I think when you have more competition, you're going to have to negotiate on things like repairs. Buyers are going to be a little bit pickier. So let's talk about affordability. That's a big factor. The affordability index has dropped to 27. That's down 18% year over year. That's definitely limiting the numbers of buyers who can buy. I want to be very clear on this. This always impacts the lower price points in our area. They'd be most affected by rates. If you look at the uber luxury market, affordability isn't so much a factor when you're of a person of great means. So that's just something to point out in regards to affordability. So on the next slide, if we look at everything, so we're 4.3 months of inventory. That puts us in a balanced range. That's not what I would call a shift. It's not a crash. It's not a boom. It's just somewhat of a balanced market. And again, if you're an agent working in the area, I think you're going to say it's a strong market. So buyer takeaway, this is a great setup for you with more, inventory coming on because you're going to have more options. Pressure is less. I caution you though, it all depends on the price point. And for sellers, your opportunities are still strong, but there is a small margin for error. You really need to price your home correctly. You need to present it correctly out of the gate, and you need to know that you're in a little bit of a competition with other houses. So to close, the bottom line is this: there is no longer a listed and hope market. You've got to be a little strategic when you're hitting the market with your house. So think about what you're going to do. Don't just throw some bad pictures up there. Speak with an expert. Ideally, you're going to be talking to me or someone on my team. And with that, if you're thinking about buying or selling, please call or text me at 904-822-9255. I'm happy to help with anything you might need.